One of the other data points that we're watching out for, it's the October inflation numbers. It's been a bit of a surprise, a positive surprise in the midst of overall weak macro data. You've got WPI in October coming in at 7.45%. Surprise because pretty much the consensus figure doing the rounds was 7.9%. You've got food inflation, manufactured product side, primary articles inflation, all pointing to signs of moderation, but the lower inflation print comes even as there's an upward revision announced yesterday on the August WPI inflation numbers to 8.01%, up from 7.55 that was reported earlier. So is this going to be enough to encourage the RBI to fine-tune monetary policy with a view to bolstering growth, particularly the manufacturing sector? Well, let's find out. We're right now speaking to Mr. D.K. Joshi. He's Chief Economist with Crisil. Mr. Joshi, good morning. Thanks very much for speaking to NDTV Profit. This is Bianca.
Good morning.
Do you think it's too early to crack open the champagne? I mean, do you think that perhaps the RBI will most likely wait another month to be sure that indeed inflation is trending lower?
Yeah, I would think so, because what's also happening is that the previous data is getting revised. So I think you have to look at some upward revision even to the October number. But I think what is really comforting is that the core inflation seems to be on a declining trajectory. It was 5.8% in August, came down to 5.6, and now I think for the month of October it is 5.2. So I think this is one of the measures which RBI tracks quite closely and is believed to reflect demand side pressures on the economy. And I think so this is one positive development which makes us believe that RBI will now veer towards easing. And I think the January, if there's another data print that will come out in the month of December, just before the policy, I think if we see this kind of trend continuing, then I think in January we should expect a rate cut.
But Mr. Joshi, on a quarterly basis, price pressures have actually intensified after the seasonal variations are stripped out at Crisil. So what is the realistic inflation picture that you have?
Well, I think our call on average inflation for 2012-13 is around 8%, and the year will end at around 7.5, 7.6 with that. And this inflation is anyway, I think, is above the RBI's comfort threshold. The consumer price inflation is not showing much sign of slowdown as yet. But as I said, I think as the growth is weakening, the demand pressures on inflation are coming off, and the rupee has also appreciated a bit from its highs, which we saw earlier, the lows which we saw earlier. So I think all that is working towards bringing inflation down. Whether will it come to the comfort band of RBI of 5%? Very, very unlikely. But yeah, I think it will come. It will reduce enough to trigger a rate cut from the central bank, because the growth picture is extremely weak, and we should expect the demand pressure on inflation to almost dry up, I mean, as we go along.
On Monday, we've seen data showing that monthly trade deficit that's climbed to its highest ever level. Industrial production has surprisingly contracted, dashing all hopes that perhaps the economy is regaining traction. And then in the middle of that, you've got a slightly optimistic sort of inflation picture coming in net. How is it that one should be reading into all these latest data sets and sort of figuring what is the way out now for the government? Because you've also got pretty much pessimistic sort of numbers coming in from the 2G auction, spectrum auction there.
Well, I think as far as the growth is concerned, growth had been coming down, but inflation decline had not been commensurate with the growth decline. Now what we are seeing is, I think particularly the core inflation is getting more aligned to the weakness in the economy. So I think as the weakness in the economy is expected to persist for some more time, I think we should see downward pressure on inflation going ahead. So I think now the disconnect between growth and inflation, I think, has reduced a bit, and we are seeing inflation moving in line with growth numbers. I mean, particularly the core inflation. As far as I think the trade data is concerned, I think exports will continue to remain weak because I think there is problem in Eurozone. Those economies are contracting, they are in recession, and rest of the world has also slowed down more than what was expected earlier. So clearly, I think we should not expect any good news on the export front. So overall, I think the weakness will continue in the second half. half. As far as industry is concerned, we believe that the second half will be much better than the first half, primarily because of a very weak base of last year, and also because I think we are seeing some movement in the mining sector, etc. So I think that should help. And the recovery primarily, I think, if it happens in industry, will come from the consumer goods side, because if you've seen the sales figures for October, we've seen some traction there, some improvement there. So I think these will get mildly reflected in IIP data. So overall, I think industry should perform better in the second half, but way below the comfort factor. I think it's much below the trend of last couple of years, and it's likely to stay there, but definitely better than the first half. Trade weakness will continue, and I think core inflation going down is creating now space for RBI to start cutting rates, and that we believe will happen in the month of January.
Okay, Mr. Joshi, thanks very much for that bit of perspective coming in from Crisil there. Meanwhile, at this point, we also have Glenn